Hello everyone, welcome to the Daily Market Updates video where I share my learnings, my insights and my view going forward. So today's theme of the day was the rally still continues. So we had the non-farm payrolls report today and apparently the markets are absorbing this event as a positive event. So without further ado, let's jump on to the analysis where I discuss multiple time frames in detail. So starting with the weekly time frame. In the weekly time frame, I wanted to discuss two important things because today is Friday and it's a closing of the week. That means we will get a closed weekly candle. So the two important developments is we tested the Bollinger Bands, the top of the Bollinger Band. And this is the sixth consecutive green week, which is very, very rare. So let me show you in the charts what I mean over here. So over here, you can see this is the weekly chart. And in the weekly chart, you can see we tested the top of the Bollinger Band today. So this is the weekly Bollinger Bands and we tested it and we holded on to the top of the Bollinger Band. Second thing that I wanted to discuss is that 1, 2, 3, 4, 5, 6. This is the sixth strong green week consecutively, which is very, very rare. So this is the observation on the weekly time frame. Remember that I discussed a concept of contract switching yesterday. So today is the last day. I would recommend that today is the expiry of the NASDAQ futures for the December contract. So from next week onwards, we will be trading the next contract. So the ticker symbol that is, the NQZ 2023 is going to be changed to the NQH 2024. So that is the March contract. So please make note of it because many a times for the active day traders like me, there is a shift in volume and there is a disparity between the charting data and your broker terminal. So that's the reason of disparity is the contract switching. So I will show you that in detail in daily analysis. But as far as the weekly time frame is concerned, these are only the two big observations that I have. And that is we tested the top of the Bollinger Band and this is the sixth consecutive green week. So that's my take on the weekly time frame. And now let's go to the daily time frame. So as discussed earlier, I wanted to emphasize on the concept of the contract switching. And I want to show you in real time, live time, why I discussed this concept and why it is important. So let me show you exactly that in charts. So this is the daily charts that you see over here. And since last 3 months, we were trading this contract that is NQZ 2023. So if you look at, if I, bring my mouse to the daily candle and if I see, you can see that the daily volume for today was 539,000. So today the NQZ contract was trading almost around 500,000 contracts per day. So this is the most liquid you can get. And let me show you the difference. So if I go to the continuous contracts, that is NQ and then exclamation mark on the trading view, then I can see the March contract that is NQH 2024. So look at the amount of volume that has occurred for this contract today. So you can see over here, under the volume section, the volume for the March contract is 186,000 contracts, give or take. So we are supposed to trade the most liquid and the most current contract that we can so that we can have the better price discovery, better spread, and be in a better sync in the markets. So that is why I wanted to show you this in real time. So from Monday onwards, this contract, that is the March contract NQH, will have the same amount of volume, for example, in the range of 500,000 to 600,000 contracts per day. So this is what I wanted to show you on the daily time frame. Now let me come back to the technical analysis and let me show you what I wanted to discuss in terms of technical charts. So in terms of technical charts, I wanted to show you two things to be precise. One is we tested the, Z Lima. Now I have never discussed a lot. First, let me come to the actual NQZ contract, that is the December contract. So this is basically the chart. Let me make it more visible. So this is the chart of Z-Lima, the daily chart of the December contract, and the purple line that you can see over here is the Z-Lima. Now, what exactly is the Z-Lima and why do I use it? It is a special kind of EMA, that is exponential moving average, but the calculations are modified to make it a less lagging. So basically, there are two types of indicators. One is the leading indicators, and other is lagging indicators. So I have included a 26 period Z-Lima, that is a zero lag EMA, into my analysis. So let me show you exactly what I mean over here. So these are all the indicators that I use, and you can see over here, this is the Z-Lima, that is zero lag moving average, and the period that I have used is the 26. So on the daily time frame, if you can see over here, it exactly stopped at the Z-Lima. So the purple line that you see is nothing but a modified moving average. And look at the beauty of technical analysis. The daily closing, that is the daily chart closing over here, exactly acted as a perfect resistance. So over here, it looks like we are going to close exactly at the resistance level of 16,100. So this is the beauty of Z-Lima, and that is why I include it into my daily technical analysis. So one observation is we closed at Z-Lima, and the other observation that I wanted to share over here is we closed on the top of the range. So what do I mean over here? So the range that we were in on the closing basis is, you can see over here, this was the top of the range. Right, and this range, right, we never closed above this range. So today is the first day that we are closing above this range. So this range breakout, I wanted to highlight this range breakout. So these are the two important observations that I have on the daily charting analysis. So we are very close on the testing the top of the Bollinger Band, and most likely when we open the session on Monday on the March contracts, we will mostly be on the top of the range. So this is my take on the daily analysis. One key development over here is we had a non-farm payroll announcement, news data release, and that was perceived to be positive by markets. Why? Because it was released in the pre-market, then the market got sold off, and then once after the regular market session opened, we were just going higher. So apparently it looks like the economy is slowing, and that is bad news for the economy but good news for the markets, because now the Federal Reserve will think twice before raising the rates. And as I showed you in the CME watch tool few days ago, there are approximately negligible chances of Fed raising the rates this meeting. So all eyes right now are on the inflation data that is going to get released on next week. So that's my take on the daily time frame. And now let's go to the intraday time frame and analyze what we can do and what we can take as learnings. In the intraday session today, I was very cautious today, because today was the release of non-farm payroll, and non-farm payroll news data release normally tends to be very volatile. So I wanted to know how markets are reacting to this news, and then take the positions after all the news data releases are over. So my game plan going into today was we have two important data releases. One was pre-market and the other was after the regular market session open. So let me show you that in the charts. So let me go to, so this is the intraday chart, right? This is the 5-minute chart that I follow. So as you can see over here on the 5:30, that is morning 5:30, we had a lot of data releases, and then after the market open, after 30 minutes, there was a Michigan consumer sentiment data release. So this was very important. So I was of the opinion that let the markets digest all this news and only trade after that. So my thesis was I will take trade only after 7 o'clock, and that's exactly what I did. So as you can see over here, we got a very early bullish sign, that is a bullish crossover. So the bullish crossover happened between the 5-day and the 26-day in the first 15 minutes of the session. So I was my bias going into today's session was bullish. Why? Because we already had a bullish crossover, and then we were just charging up higher. So after 7 o'clock, after all the news data got released, I was of the opinion, okay, now what trade can I take? So after that, we never got a crossover, but one important clue that we got is from the QQQ. So remember, today was a contract switch day. So the levels of the pivot levels that we see of the Nasdaq contracts cannot be trusted a lot, because there is a lot of contract switching happening. So my gut or my intention was to trust only the levels of QQQ, because that is the equity segment. So if you look at QQQ intraday, then you can see that how nicely the R1 got respected. So I knew going into today's session that, okay, R1 is acting as a really good resistance. So after that, what I did was I was looking for a short whenever the price approaches the R1 of the QQQ. And that's exactly what happened. Once the news data got released, and once after 7:30, we had a pullback. And then when we tested again, that was the time to short. So I shorted it. No doubt I was not able to hold it till the P0 level, but I got a really good 20 points trade. So after that, what happened is there was another important news data release on 9 o'clock, that is the WASDE report, WASDE. So I was of the opinion that after the WASDE report, after the markets absorb and see how the fundamentals are changing because of the news events, I will take trade after that. So 9 o'clock was the data release, news data release of the WASDE report, and after that we got a nice reversal and a bullish crossover again. So again we had a really good high volume day yesterday on the upside. So once I got the confirmation of the bullish crossover over here, I again took a long trade, and I again got out of 10 points of profit. So that's exactly what I did for today, as I knew that the resistance is far up, and it's way ahead. So there was a good scope of travel. So that's exactly what I did. Just 2 trades I shorted over here when the price got rejected second time from the R1 level, and then I just took a long trade over here, and both of the trades were in the December contract, that is the NQZ contract. Why? Because today the December contract was much more liquid than the March contract. So that's exactly what happened. And I was continuously tracking the VIX today, that is the VXN, and it was constantly making lower highs and lower lows. So as you can see, it was charging lower. So the volatility was continuously and slowly and surely going down. So that was my another confirmation for today. So looking at QQQ and looking at VIX, this is why I keep a close track on the correlated assets like QQQ and the inversely correlated assets like VXN, that is the VIX. So this is very important, because whenever you are using the pivot levels and whenever you are trying to track, it is very important to know that even if you are trading and dealing in derivative segment, it is very essential for you to know what is happening in the equity segment of the same index. So always keep track of equity and derivatives. So once you know the correlation between them, once you know how the things are acting, that's when you can take a very calculative and a very good risk to reward trade. So that's exactly what I did today, and this is my take on the intraday analysis, intraday time frame. And now let's go to the macroeconomic event. So under the macroeconomic event, markets are just waiting for the FOMC press conference and the inflation data release next week. So that is going to be the CPI data release, that is consumer price inflation numbers, next week. And within the same next week, our boy Jerome Powell, the Federal Reserve Chairman, is going to speak, and they are going to decide if they are going to keep the rates the same. And so far, according to the CME Watch tool, they are definitely going to keep the rates same. That is between the range of 525 basis points to 550 basis points. That is almost, give or take, 5.25% to 5.5%. So the Fed funds rate is going to be same. And now if the inflation comes in little bit softer or little bit cooler, then that is going to be the primary reason for the markets to go up. So that's my expectation. Even a single 2 handle on the inflation on the CPI numbers like 2.999 or 3.1, that is going to be a very, very good reason for the markets to again go higher. So that is my expectations, and that is my insights going forward. And I will let you know if anything changes. But right now the Monday session, that is the coming Monday session, is going to be very, very silent, because people are just waiting for the incoming data. And once we have the clarity, then the next leg of the markets will be decided. But until then, we just have to wait patiently and do our risk reward and analysis and trade responsibly. So that's my take on the macroeconomic section. So I would like to thank you for your time for viewing this video. I hope you are learning a lot and you're gaining a lot of insights and second opinion on the markets. Normally I try to give you the most unbiased way and most unbiased opinion or analysis on using technicals and fundamentals, and we try to reason everything. So please feel free to like, share and subscribe if you find value into this content. And I hope that you are making informed decisions. And as I always say, keep learning, keep growing and keep trading. Until next time, see you guys tomorrow.